So we do have CPI dropping in about 4 minutes from now. Again, this is the first time it's expected to be near 3%, forecasted coming in at 4.1%. To quickly show you what we're looking at, we're looking at 3.1 as a forecast. So again, if we come in anything under expectations, we'll be coming in at 3%. And again, the core CPI forecasted at 0.3. That will most likely come in line, but the main forecast I'm going to say is on normal CPI year on year to see if we can finally come in under or at 3%.
Was 0.3% in June compared to 1.2% in the same month a year ago. This should cut the seasonally adjusted headline rate to 3.2% in June compared to 4.1% in May and a 40-year high of 8.9% in June of last year. Energy prices may have edged up slightly in June relative to May on a tick up in gasoline and natural gas prices. However, both should show dramatic year-over-year declines and stability in global energy commodities, along with gradual improvements in refining capacity that could lead to relatively stable consumer energy prices going forward. Adding it all up and looking forward, following a sharp decline to 3.2% in June, we expect year-over-year CPI inflation to move sideways for the rest of 2023, before falling steadily to 2% by the end of 2024.
There we go then, that was a quick run up into CPI. Again, the two main charts were basically all going to be the futures. We've got the VIX, that won't actually move though till the market opens. Here we have the euro to the dollar. Again, if this is selling off, the dollar is strong. Here we have the 2-year bonds, S&P 500 futures, and then the SPY ETF. And again, we will have Squawk playing in the background. So again, that will be reading out all the news live, so we don't have to run it through manually, and then we could probably look through the key information as it comes out. So again, we'll kind of let this play out, see how it all goes, and I guess it will be interesting to see what do you guys think as well. It's going to come in line or under expectations, because I could see it, I don't know, I could see maybe a 3%, and that would be quite nice, especially considering I think the last 4 have come in under expectation. Yeah, the last 3 did. Feb was above expectation, March was in line, and then April, May, and June came in under expectations.
On year.
Don't think I was having that playing actually. He did say he was going to start off with the core CPI year on year. Again, we have about 30 seconds now to release. And this should be interesting. Again, we're going to be able to see what it moves quite right away. We'll also be paying attention to investing.com, so we can see that coming out at the same time.
$10 seconds.
Go, came out now. Okay, I'm guessing this came out under expectations because it is flying up. Haven't got the level from Squawk yet.
3% lower than the forecast of 3.1%. CPI month on month, 0.2%, 0.2% lower than the forecast of 0.3%. US core CPI year on year, 4.8%, 4.8% lower than the forecast of 5%. Core CPI month on month, 0.2%, 0.2% lower than the forecast of 0.3%. Seeing some downside in US Dixie, upside in stocks.
There we go, that was great then, yeah. Kind of as expected.
Seeing upside in WTI crude.
Kind of expected that again. Well, we were coming in at 3.1%. Again, I was kind of
US short-term interest rate futures rise after inflation data as traders pair expectations for Fed rate hikes after July.
Yeah, I was kind of having that feeling that we'd come in 3%, as we said before. That is really good, though. Again, the year on year, just to confirm, 3%
Yen
forecasted.
extends gains past 1% after the dollar drops on US CPI data.
Again, I'll throw it here. Again, forecast 3.1 came in at 3. Again, this is always going to be good for stocks because now we're less likely to have to hike rates. You'll probably see, usually you tend to see the bonds sell off on this. And again, the dollar is very weak off this. You can see it's all down to what is going to likely to cause a rate hike. If a rate hike is likely, or in this case, it's not as likely.
Gold rises after US inflation comes in cooler than forecast. Treasuries surge after CPI rises less than estimates.
That's why we're seeing the dollar sell off, because again,
Swiss franc rises to the strongest against the dollar since 2015.
The things you talk about isn't as key anymore. Yeah, so if the dollar if the rates aren't likely to be hiked like now, less likely now that we get a hike, the dollar sells off. Because again, it makes the currency weaker, the bonds get bought up, the stock indices are bought up because again, more confidence going into those. Again, we'll let the swap play out.
Note yields drop after CPI data, last at 3.905%. The dollar extending its drop.
Yeah, everything's just, and it's holding
Euro
as well.
Extends gains after US inflation data, last up 0.46% at $1.1056 versus $1.102 earlier.
Again, the interesting thing is we're holding this and we're holding
Emerging
it well.
market currencies extend advance after US data.
On most of the previous releases, they tend to be quite
Looking into the report, the index for shelter was the largest contributor to the monthly all items increase, accounting for over 70% of the increase, with the index for motor vehicle insurance also contributing. The food index increased 0.1% in June after increasing 0.2% the previous month. The index for food and home was unchanged over the month, while the index for food away from home rose 0.4% in June. The energy index rose 0.6% in June, as the major energy component indexes were mixed. Germany's two-year bond yield down 4.1 basis points, last at 3.323%. Eurozone bond yields extend fall after US CPI. Germany's 10-year bond yield down 5.7 basis points, last at 2.592%. US two-year Treasury yield falls to 4.761%. 5-year yields drop to 4.116%.
Starting to see some weakness on the stock side.
Fed swaps price in lower odds of second rate hike this year. S&P 500 E-mini futures up 0.7%, Nasdaq futures up 0.9%, Dow futures up 0.6%. Russell 2000 futures up 1.3%. Inversion in 2-year and 10-year Treasury yield curve contracts to minus 86 basis points.
Again, yeah, weakness, or not weakness, but just starting to now show some hesitation on the SPY and the S&P. Again, we're starting to see now a bit weakness on the bonds, and the dollar is kind of pulling back, trying to give back some of its gains. Again, we'll start to see everything perform, probably cover as well.
This stream is sponsored by TickStrike. TickStrike.
But the key thing to be watching for is normally the currency. The currencies will tend to fade first. So if the currency fades, we have a good chance it will fade on the underlying. So the SPY, the futures, and also the bonds.
Then 6%, 5%, 4.9%, 4%, and now 3%. So we could see, I'm sorry, that wasn't core. That was year over year. If you look at core, that's been much stickier. It was
US 2 to 5-year yields declined more than 10 basis points on the day.
Watermark back to 82. I'll do those too. So we've gone from 6.6 to 6.3, 6.0, 5.7, 5.6, 5.5. And the fly in the ointment was, if you remember, last February, this February of 23, we went from 5.5 to 5.6 in March. That uptick really made the markets nervous. Then 5.5, 5.3, and now 4.8. Why did I do all that? Because I think that over a year,
Oil futures
over the next
extend
12
gains.
months, we're
Brent
gonna get
trades
down
over
very close to
$80
the
a barrel
Fed's
for the
target,
first
maybe
time since May.
2.5%. But I don't think it's going to get there in the next several plus months. And that's the rub. So when you ask me where Fed fund futures need to be, if they're taking the tack that they need to control it immediately and see the drop immediately, they're going to have to go 2 or 3 more, in my opinion, higher than they.
Good to see we're starting to see these, well, basically everything pick up its strength again. Again, probably just temporary pullback. If we can break the highs, could be interesting. Again, this was lower than expectations, lower than expected, which is good for the indices, good for the bonds, bad for the dollar.
But we're going to see it continue, and it's all going to occur higher for longer. I think Raphael Bostic has expressed some of those exact sentiments. I just don't think that the central bank believes that we're smart enough to understand that if they take that tack, they're not being aggressive enough in the here and now, and I think that's the issue.
Right. Right. All good points, Rick. Thanks. Stay with us. Let's bring in a few more voices to talk about this new data. Allison Schrager is a senior fellow at the Manhattan Institute. Betsy Stevenson is an economics professor at the University of Michigan and a former member of the President's Council of Economic Advisors. We also have our own senior markets commentator, Mike Santoli. I'll get to you in a second, Mike. Some interesting Bitcoin, gold, the dollar index. I mean, they're all like just quick moves. So this was a number worth paying attention to. Allison, Fed's going how many more times?
Well, I think it'll depend certainly on the next report. This was expected to be good. It was. But I think there's still reasons to be concerned, particularly that inflation's still high in services. And that suggests that this last 200 basis points might be a little stickier and a little bit more entrenched than what the fall might not continue to be as fast and as
gains
steady.
after US CPI
So I think,
yield
potentially we might be going another 75, but it'll probably will know
just
more in the
repeat
fall
that
for
2-year
sure.
yield minus 10 basis
Professor
points at
Stevenson, what do you make of this
5.31%.
number? It's progress, but is it going to be uneven from here on?
Well, let me just say, I think another 75 would be a mistake. And what we're seeing in this number is that this is a game that requires patience. It is coming down. We got a little stuck on core, and I think everybody's a little nervous. I think if we had seen another month of 0.4, I would have been very worried. I'd be saying something very different. But we're seeing it come down. That 0.2 is exactly the number we needed to see to have, year over year get down under 5%. The thing the Fed has to do is it's made a promise to raise rates at least one more time. So it's going to have to do that because it sort of made that promise. It's built those expectations into the market. And then I think they really need to be pointing out how inflation does have to come down slowly and it requires patience. The rate increases they've already done are still working through the system. That's why we see the number we're seeing today. And they're going to have to
Nasdaq futures extend gains, last up 1%.
Look at the jobs report we saw last week. We see a labor market that is slowing, not crashing, but slowing. We see inflation that is slowing. This is exactly what a soft landing looks like.
Wow. Mike Santoli, on the 10-year and the 2-year, are we now below where we were last Wednesday before that ADP report? Or have we given back all those? It looked like yields are finally getting to believe the Fed. Now we're back below where now they're challenging the Fed again.
Well, I think they're believing the Fed in terms of the next, 100 feet of road right ahead of us, the July meeting. I think that's pretty well priced at this point. The Fed has been saying, I think they've been trying to send the message, Powell has, that they're willing to allow just time at these yield levels to do some of the work for it. And one of the reasons stocks have been able to do well this year, the whole equation has been, is inflation going to come down faster than the economy deteriorates or demand slows? And that's been the case. Inflation has been more benign than the concerns about growth have really taken hold. And so that's a comfortable spot to be in. And then when you're talking about a meeting in a couple of weeks for the Fed and then nothing in August, you have a September meeting, that's very much open. I think what you're seeing the market say is a better chance that the Fed's just about done. And by the way, the Fed hasn't been the main
The
story for a while.
CBOE
It's been acting as
volatility
if
index hits
inflation
a
was
one-week
mostly
low,
a
last down
2022 problem.
0.78
We're 1 year
points
past
at
that peak stagflation panic we
14.06.
got in markets with the 9% CPI, people assuming that recession was here. And we've been, I think, essentially making our peace with the current yield levels. Who knows if that continues? I do think the market took a fair bit of credit for a pretty good inflation print today before we got it. There was a lot of confidence building that it was going to be a downside surprise. Question about whether we can persist around these levels of CPI.
I mean, the drop in yields, Mike, is giving a free pass, at least for now, to the tech trade after a torrid first half rally. I mean, we questioned whether or not they can run, and we're seeing the pre-market, in reaction at least, some fairly big gains, particularly among the higher multiple stocks like an NVIDIA and a Tesla. For
sure. Look, the tight connection we saw last year, though, between mega cap tech and the direction of yields was really been broken this year. It's just yields has not been the main mover here. It's been confidence in, profit margin defensibility. It's been about AI. It's been about just buying the big obvious stocks that have great franchises. I do think what's most significant about the recent market action, though, is it has broadened out a fair bit. You have 40% of all S&P stocks are up 10% year to date. The equal weight of Russell 1000 is up 6% this year. It's not just been 7 stocks. And industrials and consumer cyclicals and transports have been outperforming. Credit looks okay. In other words, the market for now is betting we have something like a period where the soft landing seems plausible, whether we ultimately, get that or not.
Allison, I ask this all the time, and being at the Manhattan Institute, could it be this easy?
Money markets trim bets for peak ECB rates after US inflation data, and December 2023 ECB ESTR forward fall to around 3.89% from 3.92% before US CPI, and implies ECB deposit rate of under 4% by the year end.
Makes me think that now it won't happen because we've jinxed it. So, I mean, I guess I'm still cautiously optimistic, and I said, let's just wait and see if, as I said, what happens to wages and the parts of inflation that are a little bit harder to vanquish before we declare victory.
Same question, Betsy?
I think they can. I think they've been showing that they can. You've seen the Fed oscillate between early in the pandemic. What they really cared about was the labor market, and they let inflation get a little bit out of control. And now they've really pulled the hammer
Gold
down
rises
on inflation.
0.7% to $1,950 a troy ounce after US inflation eases in June.
Inflation come crashing down overnight. I think what we want to see is this nice, steady decrease. And as long as we continue to see that, I think the Fed's in good shape. And look, we're already in an inflation range where, things are getting better for families. Like we saw food at home didn't increase at all last month.
Fed's Barkin says inflation is still too high.
The price of their food's not going up.
That's true. All right, I'll end where we started. Just quickly, Rick, so do you think they're not, if they do
UK interest rate swaps show 133 basis points of Bank of England tightening priced in by March 2024 versus around 140 basis points on Tuesday.
If you'd asked me if we're going to have a soft landing, I'd say I think it's going to be great, but just like inflation being slow, the biggest problem we have is going to be commercial real estate. That's going to be the price that we pay. There's your hard landing, but it's going to take years before we really know that fact.
Yeah, and nobody coming back to work and everything else. So, commercial real estate is challenging. All right, thanks for a lot of reasons. Like talking about how tough Hollywood is. I hadn't even figured in AI for these poor writers.
Yeah.
I mean, good God.
Did you ever imagine what they would do, what somebody would do with your likeness? I mean, if they own your likeness and they own pictures of you, they own the footage, the content that you create, what else could they do with it? Because that's what contracts do.
Got it. Anyway, Allison, Betsy, Rick, and Mike, and it did not disappoint. Big moves in a lot of different...
Big moves. We'll see if they hold up.
Yeah,
there.
exactly.
Yeah. Coming up, former Fed Vice Chairman Roger Ferguson will help us understand what the new CPI number means for central bankers weighing more rate hikes. Stay tuned. Squawk Box will be right back.
The Dixie extends slide down 0.5% and set for the biggest week-on-week drop since mid-January. Fed's Barkin says demand remains elevated at the same time supply is constrained. The process of getting back to balance has been slow. Fed's Barkin says the Fed has moved aggressively as it could against inflation.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
Euro dollar rises to 2-month high of 1.1073 after US inflation data.
Was it a surprise? I don't know. Welcome back to Squawk Box. June CPI coming in cool, but it's not a surprise. It was pretty well telegraphed by a lot of people, wasn't it?
It was still cooler than
It was.
cooler.
Pound dollar rises to a near 15-month high of 1.2974 after US inflation data.
If we're not going up another 100 basis points, that's what moves these tech stocks, right? If
I mean,
it's
it
safe.
certainly
Is it safe?
helps. It helps
Yeah,
if
is it
rates
safe?
are contained below, you know,
Right.
4%.
Right. They can deal with that number. I mean, we had 8% for years and years, and tech stocks did great. Remember?
Yeah, but there's a whole generation of people
I know.
that don't remember that.
I know. Tell me about it. Look at the world. Generation is nuts.
Anyway, let's talk about what the CPI report could mean for the Fed's next interest rate decision later this month. Joining us is Roger Ferguson, the former vice chairman of the Federal Reserve, former CEO of TIAA, and a CNBC contributor. Roger, good morning to you. Always good to see you. The markets are giving the Fed a free pass for 25. Does this change anything?
Certainly, I think the market is right. The
Fed's Barkin says demand seems to be settling down, but I'm still looking to be convinced that it will feed through to inflation.
A bit more when the September meeting is as live as we might think. There will be a great deal of data between now and then, and there will also be the Jackson Hole conference, so we'll hear more. But I think the market is right, 25 upcoming, and then September, I think let's wait and see. I wouldn't take it off the table at all just because of this one report, however.
Yeah. Do you think, given the rise that we've seen, you know, in stocks in general, in tech stocks, particularly the larger mega cap stocks, some of the speculative names, do you think that concerns the Fed? Do you think that factors in that what they do is not working to dampen asset prices in this arena?
And I don't think they're focused on a specific sector. So the tech stock being up, I don't think.
At 9 a.m. Eastern Time, we expect comments from ECB's Vujicic, who speaks at an event titled ECB Policy and the Outlook for Eurozone Inflation and the Economy.
And the equity markets certainly comes into play because it creates forward momentum for consumers and investors. It, in some small way, loosens what's called financial conditions. But I don't think they're fundamentally targeting equity markets at all. They're looking at those inflation numbers and trying to understand what's driving that. And some of that is very much more about wages, which I think are much more focused on than the valuations in equity markets right now.
Well, at least the initial market reaction, Roger, indicates that markets for now are pleased. Markets for now believe that the Fed may be at bay. And as you mentioned, September may not be as live, maybe even November. Do you think that's the right takeaway here, that it looks like what the Fed has done, like maybe they actually stuck the landing? Maybe that's an increasing possibility that there is that soft landing.
Look, I think there's an increasing possibility that soft landing. which is a very positive thing. Fortunately, we still see forward momentum in many sectors. However, I think it's really too early to declare that as a done deal, because as the Fed itself has said, much of the work that they've done has not yet shown up in markets. So we haven't actually seen the full impact of the increases in interest rates thus far. And there are some sectors that are weak that historically have spilled over into the broader economy. So think about the real estate sector. And the final point to note here is, if we are fortunate enough to have a soft landing, it would be, I think the second or third out of 11 or 12 attempts the Fed has had.
Fed's Barkin says it's still a question whether inflation can settle while labor market remains as strong as it is.
Soft landing possibilities perhaps have increased.
If you're, excuse me, Roger, if you're still on the Fed and you were entitled to a dot, I'm just wondering where you would stand in terms of how you see the rate hike trajectory given this latest piece of data and what you are seeing yourself in the economy.
So what I'm seeing in the economy is really very mixed, with some sectors that are more interest sensitive and struggling a bit more than others. I think I would, based on this number, recognize that September really would be a time to take a close look. Wouldn't take the 25 basis points off the table at all just yet based on one number, because, and we've heard President Daley mention this the other day, I think they are now in what they would
Fed's Barkin
describe
says
as a
uncomfortable
risk
doing more with
management
policy
approach.
if incoming
I
data
still
does not
believe they
confirm
think
inflation will
vast
return to
majority
target.
that the risk of stopping the hikes too early is greater than the risk of continuing and going maybe one too many. And so I think that's why September is very much on the table, and we should not in any sense think that they are done at this stage. I think at least September is a real possibility.
Roger, thank you. Nice to see you, Roger Ferguson. Coming up, what to watch ahead of the opening bell on Wall Street and following the new CPI report. Futures right now still holding on to gains, although off the best levels. NASDAQ looking to add 140 at the open. S&P looked to be higher by 30. Stay tuned. You're watching Squawk Box on CNBC.
Also, we're seeing a massive pullback, or relatively strong pullback, especially on the indices, which is quite weird. In the bonds, we're actually seeing the Euro USD lagging, which is actually quite surprising to see. It's normally the currencies that fade first. So again, not something you see all that often. We'll see if they actually do continue all the way back, and if so, again, on most previous releases, SPY hasn't really gapped, or the S&P in general hasn't really gapped from the close prior. After CPI tends to give back most of the gains coming into the open, so we'll see if we get that on the S&P. Again, on the bonds, I haven't actually paid too much attention to those, not sure what happens with those. And again, the Euro USD currencies in general tend to fade most of the time. But again, they seem to be lagging that bit behind the indexes, which seem quite strange. But again, we'll see what happens with all of that. And again, if you're in the Discord, again, obviously free to join in the description. We've just posted in all the key things from today. So the stock initiations, upgrades, downgrades.
At 9 a.m. Eastern Time, we expect comments from ECB's Vujicic, who speaks at an event titled ECB Policy and the Outlook for Eurozone Inflation and the Economy.
We also threw in as well the daily calendar. So again, just to show you what's up today for the daily calendar. Key things we have is obviously what's come out, so the CPI. We got some speakers, don't really care for those. The only thing I think could be any impact is probably going to be the beige book. Again, these speakers don't really matter because they're non-voters. Market doesn't tend to move off non-voters. And again, from tomorrow, earnings still aren't pretty big names today, apart from PEP, so Pepsi. I don't think tomorrow has relatively big names either, but again, Friday's all the big banks. That's going to be the interesting one to be paying attention to.
like so many things, we're off the highs, but definitely a trend. Things improved since that soft number, cool number, the CPI data. Joining us now, Stephanie Link, Chief Investment Strategist at Hightower and a CNBC contributor. Kind of well telegraphed, maybe. This was out there, wasn't it, Steph? And but still, some interesting moves in other markets like gold or the dollar index. So it wasn't totally in the markets.
Well, yeah, I mean, it was expected to be a soft number, and it was a soft number. We're certainly making progress on inflation. And at the same time, Joe, the economy is holding up, especially on the consumer side of things, which is
Fed's
70%
Barkin says
of the
backing off
economy,
too
of
soon would
GDP,
require the Fed to do
especially when you
even
look at
more.
housing and auto and services. And so that's good. That's good news, right? It is a soft landing, like you've been talking about for the last half hour. We'll see, because we still have to wait on data coming up. I mean, there is this lag effect that we've been talking about in terms of all the Fed hikes and what that's going to mean to the economy down the road. But for now, it is soft landing. The Atlanta Fed GDP now is at 2.3%. And I think all of this is going to translate into a little bit better on the earnings side of things. And this broadening that we've seen in the marketplace is much more healthy than what we had seen in the first half of the year.
But why fight it? Why not buy the Magnificent Seven if we're almost done raising rates? That
Seems like we're getting a bit more buying pressure now back on the euro again, so weakness in the dollar. The S&P and the bonds are still getting that pullback, but just nowhere near as strong.
Not exactly cheap. And
Seems to be weird, actually. The currencies are more reactive on the upside today, while the indices seem to be a bit more reactive on the downside. Not something we see all that often.
are really low.
okay? So what would you be dabbling in today?
Yeah, so, I mean, this one is really ugly. It's 3M. You know, you guys have talked about the industrials and how they've actually done quite well. Well, 3M has not done that well. It's down 15% on the year, and it trades at 12 times earnings. Joe, there are zero and I'm investors on the buy side certainly don't own it as well. But look, they are making progress on the water contamination settlements. There's more that they have to do, but that was good news. It was less than expected in terms of the dollar amount, and it was more comprehensive. We still have to get through the. However, start doing settlements, history suggests that the stock starts to rebound. If you look at Bayer and Monsanto, that's exactly what happened. And so they also have a restructuring, and then they have a spin of their healthcare business later on this year or maybe early next year. So I actually think that that's positive, and I think, again, kind of off the radar screen.
Do you have a couple more, and we have some time?
Yes, we have American Express is one that trades at 12 times forward.
Effective Fed
estimates.
funds rate 5
Their
spot
long-term
0.8%
growth
for
rate
July
earnings
11th versus 5 spot 0.7% for July 10th.
And I like their mix. Their mix is 80% of their revenues are fee-based.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
I like the mix. I like their size and scale, especially with the affluent consumer and small, medium-sized businesses, and the return to travel and the return to business travel. So I like this one. It's up 18% on the year, but I do still like it. I think the valuation makes a lot of sense.
All right, I want to do one thing before we go and leave today. So that's going to be it, Steph. But thanks for the quick analysis. 3M and American Express. We will.
Thanks, Joe.
Maybe that's going to appear on Fast Money later. Maybe that'll be
At 5 o'clock.
at 5 o'clock
Perhaps.
Eastern Time. Another reminder: don't miss an exclusive interview with Disney CEO Bob Iger tomorrow at 8 a.m. Eastern Time. Right here on Squawk Box from Allen and Company Sun Valley Media Conference, conducted by Peabody award-winning journalist David Faber. How's that, David? He asked me to. No, he didn't. I came up with that. I'll see you Friday.
See you Friday. I'll see you tonight.
All right.
At
Kelly
5.
Kelly tomorrow. Make sure you. She only has one name. Make sure you join us tomorrow. Squawk on the Street is next.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer at the New York Stock Exchange. David Faber's on assignment. Heading to Sun Valley, as Joe says, where he'll have an exclusive with Iger tomorrow at 8 a.m. Eastern Time. Meantime, the bulls get their wish as June CPI comes in cool. Lowest monthly core in more than 2 years. Yields are dropping 2-year near 4.75 as a second rate hike this year is now in question. Our roadmap begins with that print. Inflation falling to its lowest annual rate in more than 2 years as well. Plus, game on for Microsoft after a judge rules the company can close its deal to buy Activision. And Domino's shares are surging, leading the S&P in the pre-market, announcing this new partnership delivery with Uber. Let's begin, though, with market reaction to CPI. As we said, coming in lighter than expected, Jim. Airfares down 8, used cars down 0.5.
Well, there's a lot of oddities. I mean, there's a couple of real wins that people aren't thinking about. You've got, I mean, well, yeah, you definitely have the used cars, very good, but shelter's down a little bit. And what's interesting is what's up is almost, I don't want to say it's meaningless, but bakery products, I mean, you can easily trade down on that, right? Fresh whole chicken. So, I mean, switch over to beef.
Eggs down 7.
Yeah, I mean, sugar and sweets, well, good. We should have less of those anyway. The ones that are up, I am telling you, are going our way too. Because there are things that, frankly, are not.
So just as a reminder, in about 30 minutes time now at 9:30 a.m. Eastern time, you can trade Bank of Canada rate decision with us, with our very own Tony. So the video is on the feed for all those interested. Don't forget to share it with your fellow traders and friends.
Number of plants being built, battery plants, those are not going his way. So we're going to see a plethora of new jobs created that we're really not ready for. But when it comes to the actual empirical data, I mean, like, other than Twinkies, we're in good shape.
Yeah. Well, you mentioned wages. Real average hourly earnings, Jim, June to June, now up better than 1%, is going to give some tailwind to the consumer who's going to find that things, I mean, inflation is softer than wages right now.
Yeah. I mean, I think it's just, there's some real wins here. Look, I mean, and the ones, again, that aren't so good, I mean, clocks. I mean, hey, who needs clocks? What's the point of a clock?
Maybe that's part of the issue.
Maybe they're just, like, talking about some antediluvian clock. And then we have, you know, in jewelry and watches, and I just think that's Apple Watch. So look, I know people are saying, Jim, you're being facetious. No, I'm actually being empirical. The numbers are very good. And right now, if you don't think Powell's winning on the details, I really think you should just get the page after page of what matters. But the big one is used cars. And we saw that coming with Manheim. And that is right in the sweet spot of America.
Yeah, so. And a lot of discussion how it's going to feed through into July's print as well. Yeah. That said, then why are people still talking about next week as a given?
Well, I think you have to talk about next week as a given because we are not going to see any ability to keep wages down when we have 3 states, Tennessee, Kentucky, and Louisiana, that are in a level of wanting to put up factories that they could distort the whole darn country. The number of jobs that are open because of IRA, because of chips, is so extraordinary that it's just inflationary per se. And it's really, I mean, I've been putting together the actual numbers of jobs that are required for windmills, just for pipes from West Virginia, for all the different natural gas liquids, for LNG. It's insane. So they have to. Some of these projects can't be stopped by the Fed, but the wage inflation is just going to be enormous. So I don't think it's wrong. I think Jamie Dimon has made some points today when he talks about having to go up. But it all has to do not with what we're seeing in the CPI, but what could be in the pipe for next year, given the fact that there's going to be such wage inflation caused by the federal government.
Jim mentions Dimon's comments to The Economist, talked about a bunch of different areas, bank mergers, but clearly his ongoing belief that the Fed does have more wood to chop. Take a listen.
We've never had quantitative easing like this before. We've never had quantitative tightening before. I think the effects of that in the market may be more serious than other people think.
And you think the Fed is going to have to tighten more than people maybe expect?
I think there's a good chance of that, yes.
So that leads to his long-standing view. I mean, he was early in talking about sixes.
Yes, he has. He did it with me when he was in Philadelphia. How are you going to get a bye-bye baby registered cashier person to learn how to spot weld at a liquefied natural gas plant like the 2 that are coming? How do you get the people who are being laid off at Party City engaged in how to make a windmill in Kentucky. I just don't, the job mismatch is so bad in this country that the Fed has to take notice that the whole re-education of the workforce is going to cost a lot of money.
So you're talking about job mobility, in other words,
Exactly.
right? We haven't heard Powell sort of decry this industrial policy. He hasn't come out and said, look, guys, we're trying to do something over here. You're working against us.
I think the money's already been, it's going to the states. The states, if you take a look at what a Jacobs is saying, a big general contractor, AECom, they do the actual building, and it's just humongous, and it's all concentrated. You know, Micron's trying to find, they say 2,000 people to build $100 billion worth of plants in the middle of New York. Well, the middle of New York has not produced those kinds of workers since General Electric was founded. So the mismatch has got to be noticed by Powell soon. And he has to just say, look, one of the reasons that we are concerned is because as that money is being put to work, which is right now, we can't find the workers. So you're going to have to bid up talent and then train talent. And if they're not doing it, they ought to look into it. I'm looking at just the plans from Nucor alone, and you just see that there's just a tremendous number of people have to be put to work in jobs that they don't have any experience doing.
So you think September is still alive?
I think that when you start seeing the amount of money that's going to come out in the next 3-4 months, it's just, I mean, you know, the states can't figure out how to do it. Mitch Landrieu is the infrastructure czar. He doesn't know how to do it.
Right.
No one knows how to spend all the money that they did. You know, a lot of people feel like the state should give some of the money back. Highly unlikely. And we're not going to rebuild I-95 in 2 weeks like they did in Philadelphia.
That was a one-off, for
right.
sure.
That was a one-off.
So does that mean that the ebullience among the bulls today is overstated?
Yes. Absolutely, because like we may look at the price of fish and decide, you know what, it's time to go buy Gorton's. But when I look at what's going to happen in terms of wages, I just say Kentucky, Tennessee. I mean, you're going to see a level of individual state inflation that we're going to have to start looking at. And that's why these numbers, which of course don't include homes, they took those out in 1983 in order to make the CPI look good, we're going to have to reinstate some by state. Now, they do have some geography here that's not bad, but you're going to see some states have a dramatic increase in wages and a dramatic increase in, therefore, services, because a lot of the places that they're building don't have anything around them. It's all green field. So I just think reclassify, retrain. Now, why no one's talking about this, I just don't know. I think it's because it's too granular for the numbers. I mean, yes, we're absolutely able to figure out the price of cookies, which, by the way, are hanging in there down. Sorry, Mondelez, but I don't look at, I mean, yeah, I care about Oreos, but what I really care about is community colleges, the ability to learn how to spot weld, the ability to how to be able to make it so you can build cell towers. We just don't have people who know how to do this stuff, Carl. And we have to train them. And we got to get them trained in the next 18 months because this money's there. So I just think these numbers look very good in terms of what's going on with the consumer. But when you see what's going on with wages because of the IRA and because of the CHIPS Act,
right,
you're just going to see, well, wait a second, where are all these people?
Well, maybe that is a useful tailwind given that Johnson Redbook comps are going negative. Deloitte sees back to school going negative this fall.
The back to school,
for the first time in 9 years.
That was an amazing piece. The Deloitte piece, I want to point this out, is that every year the price of going back to school increases. So, you know, every year you go to Bed Bath & Beyond, buy the really bad stuff because your kids don't know the difference. No more.
Well, the inflation on back-to-school supplies has been insane.
It's been horrible.
Right.
I mean, it's been horrible. I think that Walmart is your last saving grace to be able to help. And TJX, which got a huge upgrade today. TJX is where you go.
Loop goes to buy. They were at 75. They go to 95 on TJX.
One of the secrets of TJX, by the way, a lot of undercover former police people in the aisles who, instead of just letting you walk out, like I once saw a person walk out of Banana Republic with 3 sweaters on a hot day, I demanded to pay. I was an outlier.
Yeah.
But when you go to TJX and you're in that second sweater, there's someone comes up to you and says, take that off. That's the smart way to do it. Why won't anyone else adopt the ex-police guys?
Right.
I don't know. $50 an hour. That's the ticket.
Worker safety, that's the one
Yes.
thing. So you, in general here, although today's futures notwithstanding, remain pretty cautious. You still think the Magnificent Seven is the easiest way to play?
Yeah, because Magnificent Seven is anti-inflationary. I mean, everything about them is anti-inflationary. But now remember, I'm talking about what's going to happen in the pipe. If you're right, well, obviously today's a good day. But if you're looking at job creation in this country, you know that we're stimulating a job market that is so stimulated already. And we are not, remember, we're a consumption economy. 60% of our economy is consumption. 30% of the Chinese economy is consumption. We are going to switch it. And we're going to have to make it so maybe 40 to 45% of our economy is industrial, because we can't afford to pass up on all these jobs that Gina Raimondo, the Secretary of Commerce, brought in. And, we're talking about projects, $20, $30 billion. There's 14 battery plants in this country, which Ford got $9 billion just to build its own.
Yeah, I know, Jim, but I mean, we've had tech lay off a lot of people. Washington Post yesterday looking at hours worked getting cut as a very steady tell about what happens eventually, what happens next.
What I'm doing is trying to justify Jamie Dimon's otherwise outlier forecast to say that it could be true. By no means do I think that the Fed's losing. I think the Fed's winning. I'm just saying that we have to be very aware that the Congress and the president way overspent, and there's no place to put that money. And that money will not be spent because they can't find the workers.
Overspent on, I mean, did you not want to reshore? Did you want to continue to rely on Taiwan for chips?
No, not at all. But we have, remember, it costs five times to build a foundry in this country than it does in Taiwan. So we're going to spend the money. But,
ECB's futures says I see slight positive economic growth in the second quarter.
Where are they going to be? Now, I was in an Israeli factory, which took about 2,000 people to build, but because it's Saturdays to Sabbath, nobody worked there. Interesting. Right. I went to see it because I used to be an Intel hawk. I went to see one built near the Abbey Tavern in Ireland. A huge number of people, once it started, they only needed 100. But we're in the formative phase of building all these, and we don't have enough.
Yeah.
We just don't have enough people.
I think viewers get where you're going on wage pressure, but I mean, Adobe online prices are.
Fed Barkin says I'm comfortable doing more if inflation doesn't get to our goal.
It was a little scary to get everything that I had bought in the last 6 months down 50%. I just bought everything. What the heck? I'm like David. I bought all the stuff that I bought for David too. I'm saying that, yes, this list, I mean, yes, cupcakes, they didn't come in like I'd like them to. This list is all good. This is the Fed winning. I'm just cautioning people that we're going to have another kind of inflation that if they're not thinking about, they have to go do the work like I do, which is tedious. It's tedious to see how many people it takes to do a heavy sheet mill in Decatur, Alabama. Yep. But that's where the inflation is going to be.
We'll see if it's a pocket or if it's broad.
And that's everything.
Yeah.
That's everything.
When we come back, big news, as you know by now, on the Microsoft Activision deal after that merger.
ECB's Breach Kick says services support growth and labour market is still tight.
Here, a bunch of calls to get to, including Cisco and DraftKings and Stellantis, JP Morgan, Ford, GM. On a big day for cooling inflation. More Squawk on the Street straight ahead.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flowing futures, forex and stock instruments. Get a free trial at tickstrike.com.
Microsoft and Activision aiming to close their merger deal next week after that federal judge rejected the FTC's attempts to block it. That decision was a setback for agency chair Lina Khan and her push to challenge big tech. FTC can still appeal, and over in the UK, meantime, regulators who blocked the transaction say a newly restructured deal might require a new probe, Jim. But you said it pretty plainly last night. What, corporations want FTC zero?
Smackdown. I mean, this is one of those, by the way, just understand. There are ways to turn down an agency, but just to say the agency's dead wrong and basically doesn't know what it's doing is a rebuke. And what really makes this important, it's a Biden judge. I mean, this wasn't some Trump judge. This is a Biden judge who basically just says, look, what are you talking about? What are you talking about? This has nothing to do with antitrust. So, I mean, it's one of the things where if I were a Goldman Sachs, forget Goldman, they haven't been able to do much lately. If I was a Morgan Stanley M&A person, I'd be calling everyone and just saying, listen, free at last, we're ready. So I just think that this was such a huge win for corporate America. And Lina Khan, we're going back to the days when she wrote this seminal piece which just says mergers are bad because they only help rich people. That's not the doctrine of the United States. This judge talked about the doctrine of the United States, which is to let deals happen if they're not really causing monopolistic pricing.
Yeah,
that's the old way.
There's a look at Judge Scott and her 53-page ruling is a good one to read. What do you think Khan does now, though?
What do you think Khan does?
They push this appeal hard?
I think Khan is an unstoppable force who will keep losing. She says she's interested in doing this, but the tide has turned mostly because you have a Biden judge just saying, look, this is enough. We're not stopping deals that actually could help the American people.
And it's not just this deal. I mean, there's deals involving Meta and Illumina that some argue the courts just aren't ready for this kind of expansionist view.
There is an antitrust doctrine about what is wrong and what's right. And typically it hinges on whether the consumer, AT&T, T-Mobile, about whether the consumer gets hurt. We're going back to the logic. Does the consumer get hurt? As opposed to do richer people get rich, which is never the doctrine of the United States, ever. So Khan has been proven to be an outlier, and I think that's something that makes it so that you don't want to make the agency a joke. You don't want to reduce the agency to where it starts having really good people leave. And you can't just make up law because you're an agency. You're a commission, for heaven's sake.
You're saying the agency will read the room, in other words.
The people who work at the professionals, I don't think will tolerate anymore this abuse of her power. I just think that they'll say, you know what, we have a doctrine, we have a way that we handle antitrust, and we're not playing ball with her.
Then that'll be interesting if regulation stops being the friction force. Maybe it's, as the Journal said yesterday, price, where sellers, are like, you show me some love.
We happen to have someone who is at the center of deals that would be blocked, and his name is David Faber, and he'll be there tomorrow. And I think that the tone of the conference will be, you know what? Let's think about doing a deal, because if it doesn't hurt the consumer, the federal courts are going to go for it. And that Lina Khan is just going to prove to be a speed bump on the way to good deals.
Journal's got a piece today about Disney potentially looking at options for Star India.
Yeah, that's
one of the
something,
properties it got from Fox.
That's something that Nathanson, doing his homework now, just says is a great thing. I mean, look, we could belabor how wrong the Fox deal was, but one of the things that changed there was that they lost, that cricket was going to be this great thing that they had, and they kind of lost the good part. Anything that makes it so the debt is reduced, and David will have an exclusive with Bob Iger, is such a positive that the stock goes to 100. Now, I have a meeting today for the club at 12 o'clock, and I am saying how wrong I've been on Disney, but if you stay tuned, I can't be this wrong. Now, that does not mean I'm a broken clock and I'm right twice a day. I'm just saying that we're starting to see the unraveling of the stuff that doesn't work.
And you see, you're sticking with Disney thematically for now.
I like the term fanatic. Yes, fanatic, where's he?
Thematically.
Oh, no, I mean, because we need Ruben. We need a Philadelphia to get in there. No, I thought it was very positive that they're starting to realize it's the balance sheet, stupid. It's the balance sheet. It's not plus. It's how much they have in the till.
Yeah.
So I like it.
Yeah, we'll talk more about SAG-AFTRA and where we are on labor relations with the media industry right now and the auto industry. By the way,
auto industry.
Yep.
The fellow, Champagne, the fellow who runs the auto industry, he's a throwback to the days when they struck routinely.
Well, the talks officially start today with the UAW. By the way, quick programming note, Julia Borston will interview Activision's CEO Bobby Kotick from Sun Valley on Closing Bell this afternoon at 3 p.m. Eastern Time. Pre-markets holding in there on the back of that cooler CPI print this morning. Dow looks to open up about 240 points. We'll get Kramer's Mad Dash in the opening bell in a minute. If you're just joining us this morning, futures looking pretty good as core CPI monthly lowest gain since February of 2021 and a 3% headline print year on year. That's the lowest since March of 2021. So you'll see a lot of headlines today of inflation growth at a 2-year low. Opening bells coming up in about 5 minutes. And don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast.
This stream is sponsored by To The Tick. Get
We only got 3.5 minutes until the open. Still held up relatively well. Again, we don't see this all this often. Dollar near the lows, euro at the highs. 10 years at about midway, and the SPY and the S&Ps are still near the high.
earth-shattering with a company that is just a stop trading event. This is just amazing, this Uber Eats deal with Domino's. Right now, you can order Domino's from now on the Uber Eats app. Now, alone, Domino's does 1/3 of pizza delivery already, despite having 0 share. So I think this is worth every penny to Domino's stock, because this is a new, fantastic source, and I think that, wow, Domino's still does the delivery, but it makes so much sense. And you know what? It wouldn't shock me if eventually it's more than just Uber Eats.
Well, there's some Postmates makes its way into this report
Yes,
as well. But for those who don't know, Domino's has been famously resistant to third-party delivery.
Oh my God! I used to have Mr. Allison on, and he used to bemoan the fact that there were these entries that were making it so that his delivery network was not as effective. No more. Russell Wonder did this is an amazing
Market's
deal.
now open.
I understand the stock being up 40. I could see the stock being up 60. I mean, this is just the game changer that everybody's been waiting for. Domino's has got 1/3 of the pizza delivery despite having nothing like this. So yes, you'll call Uber Eats. You can on the app. Domino's comes.
Yeah.
Brilliant.
It has implications for unit growth for certain.
It
And then,
sure does.
by the way, there's another piece on the tape today about automation at Chipotle with a machine called the Autocado, which can cut guac time in half.
That's better than Chippy, the thing that makes it.
Oh my days, that's a lot of alerts going on.
The system. I have Sprinkler on tonight. That's another company that basically makes it so that there are fewer people in the contact center. It's happening, Carl, but it's not. These people need to be retrained in order to make heavy gauge steel. I don't know how that's done.
I like that. I like that. Big theme for you these days.
Oh my God, yes.
Is job mobility and the
This is
mismatch.
such an exciting time in business. And some great companies like a Nucor really struggle. They'll find the people and they'll train the people. But those are going to be the source of how to tamp down inflation. It's big.
There's a look at the opening bell at the big board. It is Safra Catz, CEO of Oracle, celebrating 10 years at the NYSE. At the NASDAQ, it's Gen Restaurant Group, owner of Gen Korean Barbecue, celebrating its recent IPO. Jim, I know you've been watching Oracle closely.
You never see Safra Catz.
No, not really.
I am idolatrous of what she's done. And people don't understand what a juggernaut she's created. Although, of course, Larry Ellison, I'm not doing with slight Larry, he's brilliant. But what a big deal to have Oracle listed over here. Really big deal.
Yeah. I know you've been watching the stock. Big, nice year-to-date gains. About coming off of 125.
37%.
Yep.
And a lot of this is just her insisting. When you listen to her call, people have ignored what they've been doing for some time. To ignore them now is to do so at your own peril. That's how fabulous they're moving in the cloud.
Do they belong in the Magnificent Seven?
I debate it, but they didn't send number 8. It would have been Ilya McCallan, right? Because Robert Vaughn was it.
We'll watch that closely. The other thing, Jim, is going to be the banks. We played the sound of Diamond, but today JPM does get cut at Citi. They go to neutral.
Gratuitous.
Yep.
A gratuitous downgrade that they'll have to pay for when Jamie Dimon surprises.
Yes.
But by the way, Goldman, I don't think that could you do more to pre-announce?
That's what Mayo's point was. Pre-announce without telling me you're pre-announcing in some of these news releases or comments last 6 weeks.
David Solomon, talk about lowering expectations. I mean, why don't you just say, look, there's Zion's Bank and we're coming in right underneath Zion's. I mean, why doesn't he say, listen, we've got the edge on First Republic? I don't understand this man.
You must feel better about going into the prints not as hot.
I like that, but I think it's more important is yesterday the smackdown of Lena Khan, and then the Kava deal, and how we're starting to see a lot of biotech deals. So there are things going on in M&A and things going on in IPOs that are very bullish, extremely bullish.
We talked about some of the early tells about IPOs, for example, over Morgan Stanley, and the notion that we might be entering a new cycle.
Yes, Morgan Stanley stock, my Chapel Trust owns it. It's been a pathetic parody of the human mind of late, and I'd like to see to reverse.
47 or 44.80, almost here, Jim.
Where are the bears who come on every day on our networks and say don't believe it? that where are the people who said that the best time for Apple were past? Where are the people who still think that NVIDIA is just a gaming card maker?
Well, they're probably looking at consensus for Q2 earnings.
No, they're looking for new jobs. And they are going to be the welders at the LNG products. The huge new LNG, they are needed desperately. Some of these strategists, I can tell you, I can sell this. They better learn the term acetylene.
There's your working pool of labor for some of these new factories.
Yeah, look at NVIDIA.
Wall Street strategists who've gotten the year wrong.
I think that there are a lot of things you can do when you become a metal bender. Shocker. My mom was a welder. My mom was a spot welder. You can learn anything.
Countries like Germany have a fantastic system of training people for trades.
Well, what can I say? The Germans have understood the craft that the French have, that it's okay, that a craft is something worth great value, that we have to start instituting. United Technologies, now Raytheon, they are the only ones I know that have really graduated a huge number of people from college. They're the second largest creator of college tuition payment after the U.S. government. That's a company that understands.
Yeah, a pretty nice deal for RTX on this Air Force contracts.
Yes. And don't forget, the Patriot missile does work.
Yeah. All sectors green here. Obviously, financials helping to lead, up 1%. We mentioned some of the budding labor disputes. SAG-AFTRA is facing a deadline very soon. They have agreed to federal mediation. We're watching the studios ahead of Faber's interview with Iger tomorrow. Jim, and then the autos. As you mentioned, UAW talks getting underway.
I don't like the pre-talk tenor, where there are interviews being given by the head of the UAW. They're basically saying the billionaires have made enough money. It is a little frightening to hear that kind of talk, because it's reminiscent of what you heard when labor first became a force in America. When they're starting to talk about fat cats again, I mean, even Senator Warren is more tepid than that.
Well, I mean, on the actor front, the writer front, there's new iterations of the way you make content in AI, and then in the auto business, there's the EV business, which is a different ball of wax.
Well, yes, and they don't want to see the ICE jobs, the internal combustion engines, which are being shaved back rather dramatically, making it so that they're being bumped by a joint arrangement with the battery factory where they're not going to be allowed in.
Right.
So I think that the unions are on the run, but they have the ability to shut down production. And that's going to, I happen to like Ford very much, and I think the absolute world of Jim Farley, but he's got his work cut out for him.
Yeah. Meantime, we'll watch the banks, we'll watch the autos. Are you going to get up and go? What's the plan here? I see you have a stick mic in your hand.
I did it once with Dara. I'm doing it now with
famously.
Safra. I mean, enough already.
If you
Let's just
remember,
go get Safra. Where is she?
Jim tackled Dara Khosrowshahi of Uber on IPO day with a stick mic just like this. Are we going to get a wireless camera on you, Jim?
Safra, you are the best. You know that. I've always enjoyed everything that you've done. And first of all, congratulations on everything that you've accomplished.
Well, it's a team effort, and thank you so much. And thanks for having me here.
Hold on, I've got to ask you a question. You, 37% increase this year. How much of it is the fact that people now understand the power that you have in the cloud? You personally have decided that you want cloud leadership.
Well, I've got to tell you that our cloud leadership in AI and all the startups that are coming to us are because of engineering decisions made by the team, and they are all playing out. We are the fastest in the cloud, and time is money in the cloud, so it costs a lot less for our customers. It's a great time for all of them.
And do you perceive a day when we just stop talking about Amazon Web Services and Microsoft and Google Cloud? I mean, Google Cloud? Do you laugh? Do you laugh at Google Cloud?
No, I actually give all our customers the chance to pick whatever they want. We believe in true multi-cloud. And our customers, when they try us, or our prospects when they try us, they inevitably pick us. But of course, there are customers who haven't tried us yet. And so until they do, we're not the biggest, and we respect our customers' choices.
You still love the job,
I love it.
You go to work every day.
Yes.
Larry goes to work every day.
Oh, you bet he does.
Who gives the orders now?
Hey, it's a team effort. And, you know, he's the owner. calls me boss, but can't explain that.
All right, well, look, you promised me one question. I just gave you 6. I want to congratulate you. Thank you so much.
Thank you. And thank you, Jim, for everything you say about us, because I'm always listening to you.
And because you deserve everything that you do. Thank you so much.
Thanks, Jim. Thank you, Jim.
Jim making his way back to set. That doesn't happen too often, where we manage Jim to tackle a guest on the run.
Well, Safra Catz is so incredible, and what's bothered me is she's not gotten the respect that she deserves. This is a person who has made it so that her company is not only in the conversation, but is taking share. And I think she's not given nearly enough credit, and the stock up 37% is not giving enough credit what they've done. Right. She's first, of course, a team player, as always. She has been since the day I've met her. But, oh, what a competitor. Larry Ellison, always a competitor. But think about it. Who's boss? I like her attitude.
Yeah, it kind of reminds me of this downgrade of Cisco today over at B of A as they go to neutral.
Gratuitous.
56. Like you've said that a couple times now.
Yes, because Chuck Robbins is doing very well. I mean, is it their time? I mean, we don't know. He's got to get back more and win more business behind the scenes when it comes to AI. But he does have products that are very valuable, and it's just that one of the things that has happened with NVIDIA is that NVIDIA's, because they bought Mellanox, they're front, they're back, they're everything. I was surprised that they feel they have to be in the ARM deal, but why not? Because one thing that we know about Jensen Huang, the CEO, is he's ecumenical. He takes business from everyone.
Yeah, they are looking to be, as you can see, anchor investor in that IPO. What's also interesting is that even though you can see on the chart where we got that enormous historic guidance, hasn't really been rolled back by the street or the company.
When you do $4 billion, better than people think when you've got it. What that really says is you've got a lot more than people realize. Now, Colette Kress, the unbelievably great CFO, was talking about how China, it does close out opportunities. But all I can say is get in line. You want the H200. I got to have an H200 just to be able to compete with everybody else. This company is doing things right now that are only dreamed about, but they're so much faster. You know, they're 45,000 times faster than the other guys when it comes to, say, climate. 45,000 times. Yeah. That's a lot of superiority.
That year to date, almost a 3-bagger. We're going to be talking about a 3-bagger this year.
Never seen it before in my life. Never seen it before. But then, I mean, Jensen Huang told me in 2018, will anyone ever listen to me when it comes to this kind of thing? Well, they're listening and they're buying. And the combination of chips that he's put together. Oh, no, let me just pull back. You just heard Safra Catz with a level of humility. Jensen. It's frightening because the thing that he's most proud about is the fabulous gourmet table of food he has. That's the layout that he has. He has no ego whatsoever. How could Da Vinci have no ego? Which is, of course, what I call him.
Yes, Da Vinci.
Oh, yeah.
Yeah, Da Vinci in leather.
Yeah. Look, there's business people, Carl. I know we've got to be as tough as nails. But when you're someone like me who's been in business for 44 years and you get to meet Safra Catz or you get to meet Jensen Huang, if you're not idolatrous to some degree, and I'm not a sycophant, then just go into another business. These people have changed the world. Jensen Huang has changed the world much more than the people who hit a home run last night with one man on and won the National League for the All-Star game, for heaven's sake.
Yeah. Pretty remarkable. Bill Gates with the blog post yesterday talking about the way AI will change our life, and certainly reflected in so many corners, Jim. Meta, we were mentioning earlier today.
Now, Mark, I mean, I know Mark gets kidded. Mark Zuckerberg gets kidded because he's working out with someone who's very good. But the fact is that he's going to make Threads into a juggernaut. He's got big plans that are not like Insta. It's just that we can't visualize it because he's one step ahead of us. He won against Lena Khan earlier, but that was a minor thing. But I think once he figured out how to so-called get around the Apple changes, look what that stock has done. And I think that the way we envision, as like so many other things when it comes to the people out there, the way we envision what could happen with Threads is much smaller than what will ultimately happen. And that's because they're really...
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flowing futures.
Tesla in this case, or Threads or Twitter, however you want to look at it. But, well, yeah, they're at work.
Right. I mean, but you've got think about this. You've got Jim Farley with a F-150, and you've got Elon Musk with Princess Bride, right? I mean, my name is Matoya, and then you have a guy like Zuckerberg who takes a look at what Threads is going to do and decides, if I can eliminate all the horrible, deplorable, vicious people who do nothing but say horrible things, then people will want to come in and watch the comments again. And that's what used to be the secret. And by the way, the old people who were running Twitter would tell you that when they debased it by allowing people to come in and basically assassinate people, that was when the posting stopped of any meeting. And now Zuckerberg understands that. By the way, Zuckerberg, I mean, we show him in that picture. We talk about the kinder, gentler Zuckerberg. Can you imagine what's happened in the world?
Well, I mean, it's no reflection on his demeanor. It's just that he's fit.
Well, so just seeing the Domino's pop, again, this is on news that they're now allowing their US products to be sold through Uber Eats and Postmates. I think this will be an overreaction. I will probably look to play the downside. Again, it's still a $35 gap from the previous close, which definitely seems like an overreaction to me.
Green deals?
Absolutely.
And not only that, it is at its third deviation. Again, I'll plot this out so you can see the exact levels, but it seems super extended.
They're going to be in everything involving e-commerce because everyone's been afraid of Lena Khan, but that's over. The doctrine won. Doctrine won. It's, by the way, just so you know, it's not corporations won, Khan zero. It's established antitrust Phil Arita doctrine. Go back to the 80s when Phil Arita established our doctrine and realized, as much as I like Jonathan Cantor, who's very good, he's a justice, he actually understands the doctrine. Right. The tyranny of Khan has ended. The tyranny of what I regard as distribution of wealth.
Well, it's going to be on us then, starting now, to ask CEOs whether or not they are thinking of M&A differently starting today.
You know, we have about 100 more oil companies than we need. We have about 2,000 more banks than we need, but everyone's been afraid to do anything. Except for Jamie Dimon, and that was like a rescue.
Yellen has talked about bank mergers as seeming.
So there we go. They're the key levels on Domino's Pizza. So take a DPZ. What I'll be watching for is potentially the bounce off the 380, because again, that's a deviation and our anchored VWAP should probably see a bounce off this level. So looking at that, and then if we do pop probably up to the 390s, that's where I'll be looking to take this as a swing short. Again, this will be defined risk. We have the earnings coming out on the 24th. Potentially could be playing it through there, considering it's so overextended right now. The earnings more than likely will sell off on the news unless they greatly beat expectations. So again, I'll be looking to play that short bias. Looking for the pop though off the 380 level. So we'll see how this plays out.
All right, you're getting some relief on regulation. You're getting some relief on inflation.
Yes.
You're getting close to 4,500. You're not like itching to buy more.
Well, look, I actually, we are overbought. There are areas of the market, both bank and drug, that are bad. I don't want to come in on top of these moves. Like I'm going to say this in my 12 o'clock club
that's
meeting.
today.
I don't want to come on top of a Meta move right now. I just don't want to do that. As much as I really like what's going on in Meta, I think you have to step back and say, you want to go buy the Magnificent Seven, you can buy a little now, but you have to just recognize that if you can come in and buy some NVIDIA now, but it's entirely possible that a parabolic move gets rolled back and you might get a little better price. But you can, the stuff that's down, like I'll give you an example. Right now, when I get back on my Palo Alto Networks is down $7, okay? I've got to find out exactly what happened to Palo Alto Networks. But Nikesh Arora is doing such an amazing job. So
Realised my mic was muted. So we're also coming into the key deviation on UPS, first deviation on between the 6 month and the 1 year in the 187 range. So currently where we're sitting. Again, we'll see if we can hold this or if we're going to pull back.
On the idea that it's good. But if you want to buy something that is not the Magnificent Seven, I'd sat for Cats and Oracle. Be my guest.
Yeah.
Be my guest. That stock deserves to be much higher.
Yeah, it seems like you sort of think of them as like ex officio on the Magnificent Seven board.
I mean, it sells at 21 times earnings. That's probably going to be low. I've never made a lot of money betting against Larry Ellison, mostly because I'm scared to death of him. I was once on his island in Hawaii, and I had a really good meal. And then I heard it was his island, and I said, Jesus. No man is an island. Wrong.
Exactly.
No man is an island.
Allison actually
wrong.
is an island.
Yes.
An entire island. The only thing, Jim, that we haven't gotten to really is the continued rollback in some travel. Carnival in the red. I noticed UAL met with the acting FAA chief as their dispute goes back and forth. And maybe that's a reflection of what happened in airfares.
Yes, which is actually positive. I think they may have gotten too expensive. Look, things are going Pal's way. I'm not disagreeing with that. I am saying that the areas that people are buying today are the areas that they've been buying and buying and buying. And I wish it would, at this point, I wish it would broaden out. I wish that there were retailers that people felt better about than TJ Maxx and Costco, and to some degree Walmart. But we do need to see a few more stocks go up besides Amazon, Apple. I mean, there are other companies. Palo Alto down 7.
Yeah, that's interesting, especially in this tape. Dow's up 313. Watch bonds today. We got CPI under our belt. We are going to get Kashkari about now. Bostic at 1. Mester at 4. We'll hear from. Yep. We'll hear what some of the Fed speak thinks about today's print as we get closer to the blackout window later in the week. But for now, Dow up 315. S&P 18 points from 4,500.
Rated R.
As we mentioned, Faber with the Iger tomorrow, 8 a.m. Eastern Time. Talk about Disney, the media business, box office, labor, so much to get to in that exclusive tomorrow, 8 a.m. You can't afford to miss that. Dow continues to rally here. S&P, NASDAQ, and the transports all within 1% of 52-week highs. We'll get Stop Trading with Jim after a break. Let's get to Jim and stop trading.
Yeah, look, there's a story going out there that says that Microsoft's offering a competitive product when it comes to cybersecurity to Palo Alto Networks. Let's understand. To me, it is just pure vaporware. I think it's a spin on their identity product, and believe me, they're going to use Palo Alto in their VPN. So those who are selling Palo Alto in this, be aware that they may be ultimately the winner. Nikesh Arora is not going to be beat. He's good. I do like the stock of Microsoft too, though.
Tonight, are you going to work to suppress enthusiasm?
No, I don't want to. I'm just saying that it's a little too narrow.
Yeah,
I mean,
yeah.
if you take a look like a Humana.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
I want to just go in and say, today's the day I buy tech, because that's what stupid people do. Although when it comes to Oracle, sold.
Yes.
I'm sold.
And then you do have a meeting at noon. What happens at noon today?
At noon, I'm going to outline what it's like to not just come in and buy because you see the pressure. I'm anti-FOMO. I'm going to describe that there are moments when you want to buy and there are moments when you don't want to buy, because everybody kind of feels like now, you know what, I'm a genius, I own NVIDIA. No, you can't do that. You have to you have to time things. So I know it's a drag, but I have to do it this way. Today's the day you buy Palo Alto, because it's down. Yesterday was not the day to buy Palo Alto. Today's the day.
DocuSign tonight?
Yes, got DocuSign. I got Sprinkler. They're having an analyst meeting. But look, I don't want to discourage a soul from buying anything, but I do think that if you buy things at the right time, you're going to do a lot better than buying things at the wrong time. You buy Goldman up 10 only if you think there's going to be a regime change.
Sounds like a man who wrote a book once called Get Rich Carefully. Emphasis
Nothing
on the
wrong with
carefully. Jim, we'll see you tonight.
Thank you.
Mad Money, 6 p.m. Eastern Time. We'll see how much enthusiasm the Bulls can hold here with the Dow up 300 and S&P 4483.
Eastern.
morning and welcome to another hour of Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla, live for you, as always, at Post 9 of the New York Stock Exchange. David Faber's on assignment this morning ahead of a big interview at Sun Valley tomorrow with Disney CEO Bob Iger. That's at 8 a.m. Eastern Time tomorrow. We're going to break down the biggest headlines and highlights here as well. But turning to the markets this morning, a little bit of a celebration on the cooler than expected inflation report. Good news on inflation. Smallest increase in inflation since early 2021. You can see the reaction. The S&P 500 is up 1%. The Nasdaq joins the party. It's up 1.25%. Technology is the leader in the session today, but big gains in sectors like energy, communication services, consumer discretionary, real estate, financials. All those sectors are up more than 1% in the early action. Bonds are rallying as well. We're 30 minutes into the trading session. Here are three big movers we're watching. Got to start with Activision. Shares on the move after clearing a major roadblock in Microsoft's $69 billion acquisition of the video game maker. A federal judge denying the FTC's motion for a preliminary injunction to stop the deal from being completed, which does set the stage for the two companies to merge as soon as this month. Domino's shares are surging this morning on news of a new partnership with Uber that would allow customers to order Domino's products through Uber's food delivery apps. And look at Lucid. It's under pressure today. The EV maker's delivery numbers remaining flat for the second quarter amid competition from Tesla. Lucid delivered just over 1,400 vehicles during Q2 while producing just over 2,100 vehicles at the Arizona facility. Some wild moves in that stock lately. It's down more than 8%. But Carl's story of the day is going to be inflation. And we're going to actually get some Fed speak a little bit later today. Kashkari speaking now and some others later, because it'll be interesting to see how they read this. It was pretty good news on all fronts, and I would say especially good news was the core inflation coming in better than expected, smaller than expected, below 0.2% month-over-month increase. The expectation was 0.3%. We know the Fed is watching core. It strips out food and energy, and it shows some real moderation. As far as some of the other numbers that the Fed watches, we know the core CPI services ex-shelter came in 0.09%. That was good, and also an improvement from May. Core CPI services ex-rent was 0.004% versus the 0.2% the last month. So good progress, I would say, but still, you know, the year-over-year numbers show that they're away from their target. Core CPI year-over-year, Carl, still 4.8%.
Yeah, unrounded numbers look a little bit better. Monthly core is actually 0.158 if you want to get that dramatic about it. And actually, year-on-year headline is 297. So there's some chatter like we technically do have a two-handle on headline at least.
They don't, yeah, headline great, but they're watching the core, they're watching the services. If you look into the numbers at some of the areas that were the most problematic and that we were all feeling and spending a lot, I just took a few. For instance, food at home, that's a grocery proxy. We all know how expensive it's gotten at the grocery store. 0% increase from May to June. That's a good sign. Remember, we were dealing with crazy high grocery prices. In August 2022, that was the peak, 13.5% increase from the prior year. So now we're down to 4.7% increase. Some of the other ones I pulled out, food away from home, we know restaurants are more expensive. 0.4% was better. Shelters on that list because we saw the decline there. That was important to see. Used cars had been a problem spot, and we saw that was a decline as well. So in other words, if you're the Fed and you're looking at this, you'll probably still go in July because they've pretty much promised that and there's still high inflation. Will you go in September and November? I think it depends on not just these numbers coming down, but what we see in the jobs market, if there's some signs of stress, what we see in the credit market and some of the credit conditions as well. That might be more important now as they move toward target on inflation.
Meantime, Bank of Canada up 25 as expected. We'll see sort of a precursor perhaps of what we might get here in this country. Let's bring in senior markets commentator Mike Santoli with his take on this morning's inflation print. I wonder what you found interesting inside.
Well, what I found interesting is that we were already geared and poised, I think, for a potential downside surprise. There was a lot of confidence building in recent days. People that look inside the numbers, that look at the main drivers, saying that there was real downside potential. So we bought the rumor and now we're buying the news because there is confirmation that there wasn't a lot in terms of below the line stuff that you were going to get too worried about. Now, I think all it really does is reinforce the path that the markets have already been on, at least psychologically, thematically, which is inflation and the Fed were mostly 2022 problems. Obviously, you have to worry about both of them. There's no all clear, but for the most part, the trade this year has been, is inflation going to come down faster than the economy erodes? And that's exactly what you've seen so far. So put it together with the fact that you have the credit situation that's actually looking fine. You have earnings about to be reported, and this quarter, by the estimates, is going to be the trough in terms of year-over-year change. So everything working together for a market that, yes, has already taken a ton of credit for disinflation and for earnings flattening out and for the economy potentially hitting a soft landing. So I think that's all right there well in the market. At the same time, where the S&P 500 is still 6% below where it traded a year and a half ago. Okay, where were we a year and a half ago? We were had a smaller economy, and the Fed was about to hike 500 basis points. So I think that, yep, we got July, maybe another one, 25 basis points, but they're so spread out. September doesn't look like a lock, and the trade today seems to have that complexion of Fed's all but done. If you look at the kind of stuff that's working. And again, yields, they challenged the upper end of the range on the 2, the 5, the 10, did not break through, falling fast below that. So it's really hard to quibble with the character of leadership and the reaction. I think that you can all just say, okay, but now we've already priced it in. NASDAQ 100 is up 40% year to date. How much more are you going to get out of that? At the same time when the rest of the market has started to come along and doesn't look dirt cheap.
10-year below 4%, to your point. 2-year note yield also lower today, 4.7%. They're basically pricing out even more of September.
Exactly.
So the market's thinking one and done in July. Though September, I think November is still a wild card.
No, which can absolutely change. I mean, you know you're going to have people say the year-over-year comparisons for inflation get tougher from here on out because June last year was so terrible, 9%. You're going to see people say there are sticky elements of it. Wages are where they are, and maybe we're going to have to loosen up the labor market more than we now think. All that stuff is going to be in the debate. September's going to stay live, but that's such a long ways away in market time, I think, in terms of how we're going to trade it today.
Yeah. Kramer was really focused on wages.
Yeah.
And I brought to his attention real average hourly earnings. And, you know, we wring our hands about the consumer in the second half, but maybe they do create more additional problems, incremental problems in tailwinds.
There's the wherewithal for them to spend more, for sure. I don't know if they're going to anchor to those dynamics. In other words, they don't have to target the stuff that they think maybe down the road causes inflation. They have to say, what's inflation doing? And so you want to figure out what the trend is. On a 3-month, 6-month basis, the trend looks pretty good, inflation-wise. And I don't think it's about, well, we got to make sure we restrain that consumer and go after certain elements of it. I think at this point, the numbers can speak for themselves.
They're still doing QT, though.
They're trying to let it roll off.
That's a headwind for the market, even though you don't think it is, and it hasn't been.
It hasn't been. Certainly in the last year, it hasn't been. Look, I've always
Jamie
been
Dimon thinks it is.
one of the many things in the market that affects things. So I had this yesterday. 1-year chart. You're down $600 billion in Fed balance sheet, and you see that bulge after SVB failed. That was the uptake of the special facility. Stocks are up, off those lows.
But did you make this chart to prove my theory wrong? Because now what we're seeing is the market going up, and the balance sheet comes down.
I made this chart with the position in mind that you sometimes adopt, that it's a one-for-one real-time determinant of what the market's doing. That's what I refute. Obviously, the balance sheet's double what it was before the pandemic, okay? It's not to say that we've all of a sudden started to starve the market of liquidity. What I do think, though, is it's not a direct, it's an illusion to think that it's the only thing that matters, or it's the main thing that matters.
Until it does, until the market starts to focus on it.
The Treasury General account, after the debt ceiling was passed, it's gone from 0 to $400 billion. That's draining liquidity, $400 billion in 5 weeks. And the market's up 5% in 5 weeks. So that was going to be the big scare story.
It hasn't come as much from bank reserves as people were worried
exactly,
about.
but that was foreseeable, though.
I think that, well, it was a risk.
Exactly.
But it's been better.
Yep.
Mike, thank you.
All right.
Mike Sandoli. Let's continue the conversation with former PIMCO chief economist Paul McCulley, now an adjunct professor at Georgetown University. Perfect day for you here, Paul. Do these inflation numbers change anything about what you think the Fed's going to do?
No, I think they were very warm and fuzzy numbers, and I completely agree with the commentary that Mike just provided. It's hard to add anything to what he said. He was so articulate. This is the stuff of a soft landing. This is what the Fed's been looking for. This is what the market wants to see. It doesn't change what's going to happen in 2 weeks. The Fed is going to tighten another 25. They kind of have to in order to put substance to the notion that they skipped last time. They didn't pause, and they still have one more in the dot plot for the end of the year. And I think what we'll be debating every day is when is that going to happen or if it's going to happen. So I think it's a good day.
The other thing we're going to start debating is how long are they going to stay at this very high level of interest rates? And what's it going to take to get them to come down?
I think that would be a really delightful debate to have. Really delightful debate to have. That we're going to get to the terminal rate. They've told us they want to live there for a while. And I think you'll have to have, further weakness in the labor market and further disinflation. And I think we're on track for essentially the dot plot broadly defined over the next 18 months that we're going to get a soft landing. We're actually going to get one, I think.
Are we, though, Paul? Because everybody, including the Fed, is on alert for lags, long and variable lags from all of this aggressive tightening, which doesn't that make you question the soft landing?
Not really, because if it turns out that the lagged effect is more nasty than we anticipate, then I would anticipate the Fed would ease more and quicker. Yes, I understand that. I don't like everybody agreeing with the soft landing thesis, but I think it's very credible, and I think the Fed's got a lot of room to make it happen. They don't have to stay high as long as they think if it turns out that the lags are nastier than we think.
What about the balance sheet, Paul? I mean, they're just going to keep going, shrinking it. Is that going to have any material impact on the economy? Is it going to act as a tightening or on the markets, which hasn't really been too worried about it lately?
I haven't been worried about it, and I'm not worried about it now because I think they have the architecture in place to prevent overshooting of the shrinkage of the balance sheet. And I think so far, as Mike was commenting, they've handled the TGA replacement very, very nicely, and that we have a lot of reserves in the system, and we have an escape valve that we didn't have back in 2019, which is a standing repo facility. So I think it's going to go smooth. So I'm actually in a pretty warm and fuzzy mood, if you will, today about the outlook.
You're always kind of in a warm and fuzzy mood, Paul. We appreciate it. Thank you for coming on with the analysis, especially on CPI Day.
Thank
Paul
you.
McCulley.
As we go to break this morning, here's our roadmap for the rest of the hour. More on what comes next for Microsoft and Activision as the street gets bullish on a potential deal.
Coinbase shares up more than 150% this year. Can the big run continue? We'll discuss.
And inflation taking a big bite out of one key area of spending. Find out where and what it is saying about the health of the consumer as we continue on a big day for macro and the markets. Dow's up 300.
asset.com.
Microsoft winning the court battle against the FTC to buy Activision Blizzard for about $69 billion, marking Microsoft's largest acquisition to date. Shares of Activision Blizzard trading at levels not seen since July 2021, down a bit today on some downgrades. Our next guest says this is a seminal moment across tech as it alleviates some uncertainty about mega-cap tech's ability to receive large deal regulatory approval. Brent Thill, Jefferies tech research analyst, joins us now, has a buy on Microsoft 400 target. Brent, it's great to see you. I just got to say, I mean, I imagine you agree. It's very much an endorsement of Microsoft's commitment and their development team strategy in general, right?
Yeah, that's right. I mean, this is a huge win for tech across the board, not just Microsoft. This goes back to the government basically just blocking anything. And now we're getting effectively the right thing that's being done, which is if it doesn't hurt the consumer, let it go. And there's so many pending transactions, the Adobe Figma deal, a number of other transactions that investors have been super concerned about. So I think that's probably the most important takeaway is that M&A is back, and mega cap M&A is going to continue to accelerate in our belief. And for Microsoft, you know, the gaming business is important, but what's really important there is the AI business and the commercial business. We don't get that many questions from investors on gaming, but I think what this does is opens up potential opportunity for them to shore up some of these other areas in the enterprise that maybe they wouldn't have gone after if Activision was blocked. So this really opens up and lets the story even breathe more. It'll let a lot of these other tech stories open up. And I think a lot of the SMID assets, small and mid cap in tech, are going to be fantastic targets. So great day to be an M&A banker.
Yeah, maybe that's why the Russell's at its highest since February today. Might have something to do with that. I do wonder what's more interesting to you right now, those pending deals that you think finally can see the light at the end of the tunnel, or new ideas that might actually get off the ground to begin with?
Well, now we got potentially VMware and Broadcom following through, so that was the second big one. The third one is Adobe Figma, and we've advocated since the beginning of this $20 billion transaction that this made a lot of sense. It gave more choice. It would be better for consumers. So we think the Adobe Figma deal, again, that seems to ease the pathway for Adobe to get that transaction done. That's the last pending. And to your point, I think it'll open up a lot more potential transactions. And again, I'm not saying that everything's going to get done. What we're seeing is that some of these decisions where the government was blocking everything just to say no, it was like setting a curfew for your kids. The good kids should be able to stay out past curfew, and it shouldn't be just a no to everything. So I think this is really going to be a great moment for the tech industry, and I think ultimately you're going to see more jump in on the heels of this great news for the industry.
You think investors are already looking ahead to who might be acquisition targets? It's going to change the multiples across the space?
Yes, they are. I think, again, we had so much resistance. You know, they would say, well, there's no way, Brent, that Adobe's going to get Figma done. And I think everyone that was saying that is saying, okay, they're rechecking. We think that Adobe had a strong handle. And we'll see, again, that deal still could get blocked, but ultimately we think it goes through. But yeah, I think investors now are asking, okay, who are the targets? What's next? Where are we going to go? And I think when you think about the next wave of what's about to hit is AI. And you've already seen this, you know, companies like Databricks buying an AI company with a minimal amount of revenue for a big sum of money, right? So you're going to see a considerable tailwind around the AI consolidation play. That industry is ripe for consolidation. So we think they're going to is incredible opportunity there. I think if you look in telephony, you know, that's a big area that's going to happen. If you look in infrastructure software, there's a tremendous amount of assets that are disparate and it makes sense to be consolidated. So there's multiple areas of the software stack that's going to get consolidated in our view over the next 2 years.
Brent, appreciate that. Pretty dramatic news yesterday. We'll see how much it changes the picture for tech and your job, certainly. Brent Thill, talk soon.
Thank you.
Let's keep the conversation going. Talk about the regulatory angle here. Bring in Mozelle Thompson, former FTC commissioner, for more on what happens next. Mozelle, first of all, how big of a blow is this to Lina Khan and the FTC?
Well, it was a pretty substantial loss.
I think that they put a lot of time and resources into it, but I read their opinion, and the opinion was pretty thorough. It was thorough in two senses, in its capsulization of the law and the facts, and I think they got both barrels.
So do they not understand the law, or are they trying to prove a point?
I think it's a combination of both. I think that they have an idea of where they want the law to go, and then they also have an idea of the signal they want to send to the marketplace. Unfortunately, in this case, I think they lost on both.
Unfortunately for the agency.
Right, for the agency. But on the other hand, for the marketplace, what it does signal is that there is an opportunity here to get deals done. But those deals are, I don't expect the scrutiny to end. So it may take longer to do those deals, but I think that Microsoft approached this correctly. They came out early on, defined what the deal was, and they also talked about mitigation strategies right off the bat.
Are you seeing any split in the way we think of antitrust and, say, the Europeans? There was a lot of talk for a while that there would be some melding of the minds on that front. Is that reverting?
No, I do think the Europeans have a degree of skepticism about big tech, and that's something that's shared by Lina Khan. But I'm not sure the courts in the United States have bought that same skepticism.
You said others will be encouraged, though they'll have to fight the FTC, and they'll have to be prepared to go to court, and not everybody has the resources or the stomach that Microsoft does to do that.
That's true, but also the FTC doesn't have unlimited resources either. So what it says to me is that they're going to have to be careful about the battles they pick, and to be, one of the key things about a regulatory agency, they have two strengths. One is not only bringing a case, but the message they send to the marketplace. And so the FTC has always been known for bringing cases and winning them. To the extent that they are not winning them, that also sends a message to the marketplace that makes them less effective. I think that they have to think about that, but they also have to think about what kind of cases they want to bring to establish the law that they want to, because when you go to the court, you could also get a ruling that could hurt you in the future. And I think that that's something they have to think about.
You're a good person to ask about whether or not there's a split between leadership at the agency and staff, right? In other words, can you rally the troops to say, hey, let's take this one on, even though we have suffered a few embarrassing losses in court?
Well, I think, look, the agency leadership and the staff like to win, okay? They're not being quite as successful now, so let's see what they can do to bring that together. A good win will do that.
You said that she wants to change the law?
Yeah, I think that she's talked about this a lot, and she's talked about going to Congress. Congress has not necessarily agreed with her at this stage, but at the same time, she's also pushing it in the public arena about where she thinks antitrust law should go. I'm not sure the courts have caught up with her yet.
So if you were on a corporate board considering a deal, would you be more ambitious today, or would you be just as ambitious as you were, but perhaps knowing you don't need to go the distance you might have before?
I think I would still, if the deal still made sense, I would pursue it, but I'd recognize that there would be some substantial hurdles, and that could change the time outlook and the pricing of the deal.
So longer windows.
That's right.
That's the things we've been seeing.
That's right. But what I think this says is that usually people think the court avenue is not the good way to go. The settlement avenue is the good way to go. In this case, what we're seeing now is maybe the court avenue is the good way to go. That takes longer, but may be fruitful.
Think Horizon gets approved, the pharma deal everyone's watching after this?
I'm not sure. Pharma is just a different kind of animal. I think one of the things in this particular case is that the FTC and the administration has made big tech.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
A quick programming note as we go to break. Do not miss Activision Blizzard Chief Bobby Kotick on the closing bell today, 3 p.m. hour, live from Allen & Company's Sun Valley Media Conference. A lot of questions for Bobby. And that's not all. Disney's Chief Bob Iger will sit down with Faber tomorrow, 8 a.m. Eastern Time, in another interview that you do not want to miss. A lot more still ahead. Stay with us.
CNBC app.
Dow's up 270. Meta CEO and founder Mark Zuckerberg making headlines yet again, this time for photos posted after a workout, of course, with two UFC fighters. Everyone's talking about his muscles and how good he looks and how Elon Musk is screwed if they actually end up in this cage match. I can't believe we're talking about this. The only thing I'll say is there's actually no confirmation that the fight is taking place. But if they do, they better do it for charity, and I can't even believe that that's where we are headed.
Yeah, we've been talking about what board members are saying right now. Like, we really want to do this? Is this really a good idea? What positive comes out on the other side of the
Like
whether you win or lose?
Twitter.
Right.
I don't know. This would never happen with female CEOs. It's just like so ridiculous.
Still to come this morning, market vet Art Cashin with his take on this morning's CPI print, as the broader market's definitely holding on to gains, only about 15 points away from 4,500, which, as you know, was a pretty aggressive target for the year going into the year. We're back in 2.
Welcome back to Squawk on the Street. I'm Pippa Stevens with your CNBC News Update. President Joe Biden meeting with Ukrainian President Volodymyr Zelensky this morning at the NATO summit in Lithuania. Mr. Biden reaffirmed America's commitment to helping Ukraine in the war with Russia for as long as it takes. Their meeting came just moments after he unveiled the G7 declaration, making the same pledge of support.
All our allies agreed Ukraine's future lies in NATO. That's not a surprise to any of us, I don't think. I hope it's not a surprise to you, Mr. President.
Microsoft announced today that Chinese hackers broke into email accounts of around 25 organizations, including multiple government agencies. According to the tech giant, hacks started May 15th and went undetected until June 16th. Microsoft did not disclose whether the hackers were affiliated with China's government. And the drawing for the Powerball 7, the largest jackpot ever, takes place tonight. The $725 million prize comes with a cash option of just over $366 million. Tickets are $2 each. Sarah, best of luck in the drawing.
All right, I'll do it then. Thank you, Pippa. Pippa Stevens. Just over an hour into the trading day, and we're seeing a nice broad rally. The S&P's up 1%, NASDAQ even more, every sector higher. Bob Pisani, an encouraging sign for those, as you've been saying, are looking for the rally to broaden out.
Does it get any better than this? Inflation below expectations, wages in line. I mean, and Sarah's right. She's always right. We're getting broadening out of the market. Well, I wouldn't say it if it wasn't true. We're getting broadening out of the market. Take a look. I just want to show you some of the major indexes. I don't normally put up the Russell 2000, But look, it's one of the leaders today. When was the last time you saw that happening? That's broadening out of the market. When the Russell 2000 is in the top of the major sector leaderboard. S&P 500, we close here, and I use closing prices, not intraday. That's a new high, 52-week high for the S&P. That's a 52-week high for the NASDAQ. Closing, if we close right here. Dow Industrials is just a little bit shy of a 52-week closing high, but we could do it today. So the big thing is the broadening out of the market. Let me just show you some of the sectors. You see, we're going into earnings, right? Traditionally, banks start selling off going into earnings season. No, we're holding up. And then banks have been a leadership group this week. Semi's been a leadership group all year practically, so that's not surprising. But we've seen metals and mining. There's a cyclical group that hasn't done very well. Leadership group. Energy, another group not doing well. Leadership group now all of a sudden. Oil's over $75. Consumer staples are lagging. Healthcare is lagging. Let me tell you why this is good. You do not want defensive sectors like healthcare and consumer staples being on top of the leadership board when you've got a soft landing scenario, because those are defensive stocks. You want other sectors like cyclicals to lead. That's exactly what's happening here. So we are getting a broadening out, and the soft landing scenario is actually coming to be. New high list is not terribly expansive. This goes to the fact that tech stocks have been so dominant, but we have a persistent group of big global industrials. The names I love: General Electric, Eaton, Ingersoll Rand, Illinois Tool Works, Packard, Carrier, Fastenal. These companies make all the stuff behind the walls. They make the pumps, and they make a lot of the tools that run the entire world here. The real physical manufacturing part of the global economy. They're at new highs. Smattering of other groups at new highs. JP Morgan, remember, earnings on Friday, that's a new 52-week high for them. That's a good sign. Again, not selling off going into earnings season, which is typical. MasterCard and Visa at new high. A lot of the airlines, Delta, Alaska, American Airlines, also 52-week highs. So turn this around a little bit. I just want to show you stuff near new lows. United Health is going to be reporting on Friday. We could close at a 52-week low today. So remember, besides being defensive, a little out of favor, a lot of high utilization rates in the healthcare sector, particularly the sector that United Health is in, and that's putting a lot of pressure on their overall numbers here. As for where we are on the markets now, the story is pretty simple right now. It's coming on Goldilocks. Inflation is cooling. That's what everybody was looking for. There are some signs the rally is broadening out. We have seen this before and been disappointed, but at least in the last few days, that is in fact happening. 2023 earnings, we're going to talk a lot about this in the next week. The bottom line is that they are steady. There is no cliff where all of a sudden earnings are going to fall down in the second half of the year. But Sarah, valuations are now the issue. So what's been happening is the prices have been going up, but
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci and market profile levels by signing up at tothetick.com.
on the S&P 500. That's not only not a recession, that's expansion. That's economic expansion kind of multiples. And that's going to be the problem. So next week, let me tell you what's going to happen. We could see companies reporting they beat and they don't move forward because of the valuation problems. That's going to be the story next week. You watch. And we've had some early reporters that have had great numbers and the stocks don't go up. And I think that's the problem. The valuation ceiling is going to be the major discussion.
Yeah, a strong setup, no doubt. So Bob, there's this debate around earnings. Is this season going to be trough earnings? Bank of America says yes.
Yes, on a pure numbers basis, in what are we in the $54 range, somewhere around there? Yes, it will be. I think the key story here is there going to be any kind of cliff in the second half of the year? Like Mike Wilson, those people we're talking about. And there isn't any. The analysts have been steadfast in not moving their second half numbers. The strategists have. Several big strategists like Mike Wilson have, and so far they've been wrong. Now, the analysts are often derided as being slow, kind of dumb. They stick to their little knitting. They cover their caterpillar and they don't want to move because they want to wait till the CEO says something to them. And they're often derided and made fun of. Well, in this case, they've been right. They say nothing because they keep to their models. They're microeconomic models. They just cover the industry. They don't cover the global economy like the strategists do. And so far, the slow, dumb analysts, as they're likely to be called, they're the ones that have been right this year.
We'll see what's going to happen in the next few weeks, Bob. Thanks.
Okay.
Bob Pisani. Let's keep that conversation going today. Bring in UBS Director of Floor Operations, Art Cashin. Art, I'm sure you've been listening to Bob. I'd love to get you on CPI, though, first, and just get a take on how much comfort you take in that print.
Oh, I think it was excellent. By the way, it was a very gutsy call by Tom Lee of FundStrat. who came on your network earlier and predicted that the number would be that low, and that did get a positive reaction out of the stock market. I think I lean a little bit with Kramer. I think you want to watch wages. The Teamsters UPS situation, organized labor, is beginning to feel its oats, and I think with the economy looking like it's not moving toward a recession, that you may get some very, very high pressure for big jumps. So I think that and the fact that, you know, the services end of inflation is not coming down. But for today, the biggest risk to the bulls is that they run out of champagne. You know, they've broken out, as Bob pointed out. We're up above that 44.55 level. We have some resistance up around the 4,500 to 4,520 level, but I think for now, the bulls have got it right where they wanted to move it. You're seeing a lot of stocks in the various indices beginning to move above their 50-day moving averages. So Bob's point about broadening out is absolutely true. Not only is the Russell moving up, but a big component of the Russell, the regional banks, are hot as a pistol today. And so that has got to be encouraging for at least a near-term look to the rally.
When you look at the bond picture right now, do you see a good reason why they should start to go lower, yields I mean? And if they do, when does the market start worrying about that side of the equation?
Well, I think, you know, I know you see my daily pre-opening thing, and I've been writing for a couple of weeks now that we look like we might be having a double top in the 10-year at 4.08, 4.10, and so far that's looking secure, and I think that's giving the bond bulls a bit of hope in there. Now, will that change? The real question is, what will be the reason for the change? Is it going to be the economy? Is it going to be a resurgence of inflation? I think what's going to be important, and it's always important, but a little bit more this year, is Jackson Hole. You know, we're gonna get the hike in July, and before we get to the September, we're gonna have the Fed meeting in Jackson Hole, and I think that could be even more important than it usually is. So I'll be keeping an eye on that.
I think there's a risk, Art, and I know the market's certainly not telling you this now, that the Fed, there's this view on the Fed that they have to keep going on inflation until they are fully convinced that we're heading back to target. And there's a worry that if they stop prematurely, then it'll pop back up again. Some comments from Tom Barkin on the Federal Reserve, Richmond Fed president. Inflation is too high. Our target's 2%. If you back off too soon, inflation come back strong, which then requires the Fed to do even more. So there is a risk that the Fed goes July, goes potentially September. We'll have to keep going, and that's not what the market is saying right now.
Well, there's no question it's not what the market's saying, and as usual, Sari is spot on. But I think what you've got to put the Fed within the context that misuse of transitory has hung like an albatross around their neck. So they don't want to be put in a position where they make a move that looks to be definitive. That's why they didn't want to use the word pause. They were very careful. They are deathly afraid of declaring the war to be over and then have inflation begin to surge back up again. Absolutely not. Powell has fancied himself as the modern Paul Volcker, and I think that goes through the entire committee. I think you're spot on. I think they're terrified of that. And is it a possibility? Yes, it always is, because you're dealing with human psychology. But for now, as I say, the champagne is flowing and the bulls are happy. And the important thing is, where do we close? Do we get to today's close with the same kind of ebullient feeling that we've had all morning? And I'll be watching that too. I'll be watching to see if they get above 45, and do they run into resistance between 45 and 45.20.
Finally, Art, and we'll get to the banks on Friday, obviously. A lot of discussion about, we mentioned M&A, maybe lighter touch on regulation, some indications that we might be getting into a new cycle on IPO. Do you think the banks are looking interesting here, even though I see Wells today points out post-earnings they tend to underperform, even though they usually ramp up nicely in advance?
Yeah, I think we had a major bump along the road, Carl, in the Silicon Valley Bank and Signature and the others. And I think the political sentiment as far as the banks, and everybody's terrified. We used to have 15,000 banks, now we're down to about 4,000, and we don't want to be like other nations where there are 5 or 6 major banks. And the history of keeping banks open, it runs back more than a century in this country. They used to forbid branch banking. They wanted new banks in every location. So it's, well, I'm just too old. I remember all that stuff.
Art, a lot more still to come this week. Good to check in with you, though, on an important day today. Art Cash.
My pleasure.
Thanks, Art. Still to come, Coinbase shares up triple digits so far this year. The Cathie Woods ARK Invest just sold over 130,000 shares. More on what comes next for that name after the break. Stay with us. Welcome back to Squawk on the Street. What a comeback for Coinbase shares this year. But that said, some of the street sees risk to the rally. Let's get to Kate Rooney with the details. We were talking to Dan Dolov yesterday, Kate. He still thinks it's It's a 0.
Yeah, Dan Dolev is among the most opinionated out there on Coinbase, Sarah. But there is some growing skepticism among others on Wall Street that this Coinbase run can last, especially with the list of challenges the crypto company faces ahead of earnings. The chart tells a pretty rosy story. It's up about 150% so far this year, 65% or so in the last month, 10% just yesterday. It's down slightly today, though. Part of what lit the fuse was Bitcoin's recovery. Coinbase and other crypto stocks have been a high beta play on Bitcoin, so when it rises or falls, Coinbase tends to follow with outsized moves. There's also hope for a spot Bitcoin ETF. Coinbase was named as a partner in BlackRock's recent application. And the final factor, guys, a likely short squeeze going on. Coinbase has about 22% of the available shares borrowed for short selling. So that's about 4 times what you see with the average stock. Even a small positive headline can send traders rushing to buy back shares and protect against some of those losses. Also seen Kathy Wood's ARK this morning, one of Coinbase's largest shareholders. Among those taking profits this week, ARK sold about $12 million worth of Coinbase. We're seeing analyst downgrades pour in as well. Got Atlantic Equities this morning citing weak volumes and regulation. They say the risk reward looks less attractive given some of those challenges. Firm is raising its price target but downgrading shares. Oppenheimer, meanwhile, says sentiment has improved but fundamentals have not. They say they're cautious going into earnings and estimate that trading volume is down about 35% quarter over quarter. Then you've got Piper Sandler saying it's all about valuation. They say there's too much regulatory uncertainty to project future revenue, guys. Carl, back to you.
It's definitely been quite a run. Street's trying to catch up to a lot of it, Kay. Thanks, Kay Rooney. Still to come this morning, growing warnings around retail ahead of make or break back to school season. What investors need to know about this fall when we're back in a moment. CPI this morning, definitely lower than expected, but that said, some growing warnings around the health of the consumer are beginning to circulate, especially when it comes to back to school later this year. Courtney Reagan joins us with the latest. Morning, Court.
Hi, good morning, Carl. So while total inflation just turned in the lowest increase since March of 2021, the cost of school supplies is up 24% in the last 2 years. Not to mention the increasing cost of education and childcare in the U.S. Overall, back-to-school spending is expected to fall by 10% compared to last year, a decrease of more than $3 billion in aggregate. This according to a new survey by Deloitte. It's the first forecasted year-over-year drop since 2014. More than half of parents say they'll spend less on back-to-school because of reduced disposable income, and 3/4 that it's because of higher prices, up sharply from last year that said the same. Nearly a third of parents say their financial situation worsened from last year, and more than half expect the broader economy to weaken in the next 6 months. Back-to-school spending on clothing could take the biggest hit, with spending expected to fall 14%, technology spend estimated to drop 13%, some of that being redirected to cover the higher cost of school supplies. The good news is retailers have the opportunity to capture more sales if they offer something special. The vast majority will shop at mass merchants when they do buy, with nearly half saying they'll spend most of their back-to-school dollars there. So Walmart, Target, that falls into that category, followed by online retailers like Amazon. A third say they'll buy it off-price in dollar stores like TJ Maxx, Ross, and Dollar Tree. KPMG principal Julia Wilson expects the current Amazon Prime event to capture a good share because its survey showed 40% of consumers plan to shop online, and July marks the top month for back-to-school shopping generally. Carl and Sarah?
It's such interesting results, Courtney, because we're all trying to figure out what's happening with consumer, because on the other hand, I mean, yes, they're dealing with inflation and sticker shock, but on the other hand, they have jobs and they feel confident in their jobs, and wage growth has been sound, and we're seeing, you know, bigger events kind of spending around things like back to school. So it should be really interesting, I think, what happens and which stores benefit.
Absolutely, and very confusing too when we're seeing these really strong numbers for travel and leisure, at least in some areas. I guess not at Disney, but airlines reporting, you know, record numbers of passengers. So we're spending, but in different areas, and certainly some caution about what's to come. And I think that's the key from this report.
Court, thanks. A pretty interesting Deloitte report, which we'll talk about a little bit more this morning. A quick reminder, though, as we kick off another hour of Squawk on the Street, don't miss David's Big Sun Valley interview with Bob Iger tomorrow, 8 a.m. Eastern Time. A lot to talk about with Iger regarding Disney itself and, of course, the media business at large. Bulls hanging on to the football here. Dow up 280. Squawk on the Street continues after this.
Think we'll call it a day here. Again, the main trade we were looking at today was a bit cautious after the CPI. Again, we have the SPY now coming back to test its VWAP. I'm never a big fan, though, of trading days where we're this far from the anchored VWAP, because to be honest, that normally provides a great trading opportunity on both that and the futures. But obviously miles away as of right now, so I can't really trade anything off that. And so really the main trading opportunity for me today was on Domino's, ticker DPZ. Opened up at its third deviation. We sold off. We came into our third deviation from the 6 month and our anchored VWAP. To me, that's a long. Got long on that. We ended up selling out for about 3.5 points profit, just because it started to kind of consolidate, so it didn't make sense to really stay in. So I got out of that. Again, we'll see how it is. Really, I want to see a spike up though to 401, and then I will look to swing trade that short bias. Actually, probably even from this VWAP, if we can push back to 191, probably look to open a swing long short bias.